This is another short TA segment where we're going to discuss the 4 most important bullish reversal patterns. Now we do have different patterns, fine, but some of them are really important. See, this is a falling wedge where we get that 1, 2, 3, 4, 5 pattern in a different manner, right? Then this one, which is a double bottom. In this inverse head and shoulder, you can actually see similar 1, 2, 3, 4, 5 pattern, and then a break to the upside, coming back to the downside to retest, and then bouncing higher. So now in these patterns, we know that there is something in common, which is that 1, 2, 3, 4, 5 pattern happening within a different composed area. Now here you can see the pattern is a little bit different. Now we have Now this is also a repeating pattern in the crypto reversals, but the difference is we have talked that in detail in last video, so we're not going in depth for that one. Now let's talk like what's happening here in these patterns and how can you take the advantage of that. So here, the falling wedge, what we can see is literally the price is moving down, it's trending down, and it actually goes in and remains inside that trending lower. Each time it's coming down, it's actually creating a new lower low along with a new lower high. So it is trending lower. At one point, it actually bounces, but again, it's a lower high compared to this one. But it happens to break this one where you kind of get the idea, okay, retested with a higher low compared to this one, and then a break higher. So now you got higher highs. So higher low, higher high, both came in there with this pattern. That's the bullish level which you are following. Now next one, again, you come to the downside, your trend is to the downside, fine, but at that point you start to bounce, there is a difference. You go back, you change the high, you make a new high, but again you are coming back down. But in this position you're not actually going to the downside, continuing the trend, so there is a change in the trend. The downtrend is now entering into a consolidative trend. That's important to understand, because at that point now you're looking for a bounce, and when you're bouncing you know that this one is going to be a resistance. But what happens in this case of a triple bottom is like you reverse way before hitting that high, and you feel like, okay, that's a lower high, maybe I'm going to put in a lower low. Now you don't have a confirmation for that until this point, but when you bounce from here, the probability is high for you to go back higher and break this, retest and bounce. So that's the level of bullishness we are talking here. Now next one, again the same stuff, the supply demand economics, it's actually kind of working here. You come down, you're trending lower, you bounce back at one point, you get resisted. If you go for XRP chart, you can see that kind of that similar pattern at the level of 0.3, 0.35. You go below that, you go back up, test this and get rejected. Now this is your capitulation zone, right? Now in the pattern, it's the head. Now you go back up, again get resisted, they come back down. But you actually most likely get an inverse head and shoulder inside that shoulder, right? You can see that in different cryptos, and then you break to the upside, come back, retest and bounce. So this particular range is your supply demand zone, and above that you are getting sellers who is pushing the price down, and below that you are getting the buyers who is pushing the price back up. So whatever is being sold in the market is being absorbed, and any extra supply is being catched, and that's why the price is now going back up. So if you see these patterns after the price going up and then coming down like this in this range, what you're going to get is a burst to the upside. If you liked this short TA segment and you want to watch another one, look at this video, or else if you want to look for a long technical, fundamental and current affairs analysis, you can look at this video. So that's it for now, guys. Bye bye.